Okay, so you did it. You found the perfect home, you scrimped and saved for that down payment, and you are so ready to get those keys. But what if I told you there's a secret second price tag hiding in the whole process? Well, today we're going to pull back that curtain on closing costs, demystify this whole thing, and make sure you have absolutely zero expensive surprises on your big day.
Right, let's get into it. For way too many homebuyers, closing costs are like a hidden boss battle at the end of a video game. It's this surprise challenge that can pop up and demand tens of thousands of dollars you never even saw coming. It's the final hurdle between you and your new house. And our mission today? To give you all the cheat codes to win.
You're going to hear this rule of thumb a lot. Expect your closing costs to be somewhere between 2% and 5% of the home's purchase price. Now, that might not sound like a huge number, but think about it. We're talking about thousands, maybe even tens of thousands of dollars that you need to have ready in addition to your down payment.
To make this all super clear, we're going to use a real-world example through this whole explainer. So let's just imagine we're buying a $400,000 home. We worked hard and saved up a 5% down payment. That's $20,000. So you'd think, okay, I just need 20 grand, right? Well, this is exactly where those closing costs come in to crash the party.
Look, all those confusing line items on your official documents, they can actually be sorted into three pretty simple buckets. First, you've got your lender fees. That's what the bank is charging you. Then you have third-party and title fees for all the other professionals involved. And finally, the one that trips everyone up, prepaids. We're going to break them down one by one.
So let's start with bucket number one. These are the fees your lender charges you for the service of, actually creating your loan. This is the money that goes straight into the bank's pocket.
Whoa, okay, look at that first line, the loan origination fee. This is the bank's main charge, and it's usually about 0.5% to 1% of your total loan amount. So for our $380,000 loan, that's a huge $3,800 chunk right there. Then you've got other little fees for admin and paperwork that can tack on another grand. So the big takeaway here is this first bucket alone is almost $5,000. But here's the good news. This is also the most negotiable part of your closing costs.
Okay, now beyond what you're paying the bank, there's a whole second bucket of fees for other independent pros. The home appraisal, that's for the bank. They have to make sure the house is actually worth what you're paying. But the home inspection, listen to me, that is 100% for you. It's technically optional, but it is your only defense against accidentally buying a house with a leaky roof or a cracked foundation. Whatever you do not skip it. This next part, title insurance, tends to trip a lot of people up. See, there are two different kinds. You are required to buy a policy for your lender that protects their investment. But the owner's title insurance, that protects you from any weird, surprise claims on the property from the past. It's a one-time fee that protects you for as long as you own the home, and it is absolutely worth it. And here's a little pro tip for you. You can often negotiate for the seller to pay for your policy. These fees, they're all about the critical work happening behind the scenes to make sure the sale is legal and legit. You've got a title company that searches public records to make sure the seller can actually sell the place. You've got a neutral escrow company to handle all the money and paperwork. And then your local government charges a fee just to record you as the new official owner. All this stuff ensures the transfer of ownership is clean and official.
All right, let's tackle the final and definitely the most misunderstood bucket of costs, the prepaids. Here is the absolute key to understanding these. They are not actually fees for services you've received. This is you paying future bills ahead of time, and your lender requires it to protect their investment.
So here's how it works. Your lender is going to make you pay for the entire first year of your homeowner's insurance policy, all at once, upfront. They're also going to require you to prepay several months of your property taxes into a special account called an escrow account. And finally, you have to pay the daily mortgage interest for whatever days are left in the month you close in. As you can see, it adds up really, really fast.
Okay, we've gone through all three buckets. We've seen all the line items. Now, it is time to put it all together and reveal the single most important number you need to know for closing day.
So, after adding everything up from our three buckets, the grand total for our estimated closing costs on this $400,000 home comes out to $11,300. This lands right around 2.8% of the purchase price, so it's perfectly within that 2 to 5% range we talked about. But wait, this is not the final number you need to bring to the table.
And here it is. This is the key distinction that gets so many buyers. It's the difference between your closing costs and your cash to close. The cash to close is the actual amount of money you have to wire on closing day. It's your down payment plus all of those closing costs we just calculated. And there it is, the final boss number. You thought you needed $20,000 to get the keys, but in reality, you actually need to have $31,300 ready to go. This is the number that sends so many first-time buyers into a panic, and it's exactly why understanding all these costs beforehand is so incredibly powerful.
Now, I know that number might seem intimidating, but the good news is you actually have some control here. You don't have to just accept these costs as they are. There are proven strategies you can use to lower that final number and save yourself thousands of dollars.
First up, always get loan estimates from at least 3 different lenders and make them compete for your business on those fees. Second, don't be afraid to ask the seller to chip in some money towards your closing costs. It's called a seller concession, and it's a super common point of negotiation. And finally, there's a really simple trick that has to do with timing. Okay, this is one of the simplest ways to save a few $100. Remember that prepaid daily interest we talked about? Well, if you schedule your closing for the very last day of the month, you pretty much eliminate that fee because there are no more days left in the month to pay interest on. It's a simple move that can easily save you hundreds.
At the end of the day, being prepared for closing costs is what separates a smooth, exciting closing day from a stressful, last-minute scramble for cash. When you understand what these fees are and you actually plan for them, you take all the fear out of the equation and you put yourself in complete control of the process. So what's the one thing you learned today that's going to change how you approach buying a home?